Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Hello, this is the COB, all the stuff you need to know about the day in business and markets. Don't know what I did or said, but I'm all alone today by myself. I'm Juliette Sarli, but thank you so much for joining us. Let's have a quick look at what we saw in the markets today. And you know, it was a pretty lackluster day, in fact, pretty mixed when it comes to the sectors. I think half were in the red, half were in the green, and it looks like we're going to edge higher just ever so slightly, about a 9% drop so far on the ASIC 200, but of course we're just at the match out at the moment. That could flip. But really what's interesting is the gain that we've seen over the last 5 days. So the ASIC 200 up by 1.1% over the last 5 days, virtually unchanged year to date though. And really those gains are due to the fact that we had that very solid session, of course, coming through on Wednesday in response to the CPI data from the US. So thanks to that strong rally, it does look like we're going to end the week in the green. Well, what a week, of course, in terms of a lot of volatility. We had the wage price index data, we had the jobs number, always a bit like throwing it at the dartboard there. But what is that all going to mean for the RBA? We'll be asking Dr. Shane Oliver from AMP in a moment. And the other key move, of course, has really been reflected in what you've seen in the telcos. The Optus CEO, Kelly Rosmarin, really grilled at a Senate hearing today. There has been speculation that, of course, perhaps may not come as a surprise, that perhaps that she might be stepping down. She did acknowledge to that Senate inquiry that there was more Optus could have done to communicate with customers and the government in the early hours of the coverage, the outage, I should say. And we have heard that the AFR said she is weighing up her future and could resign in the next week. Now, this hugely damaging outage came, of course, just a year after Optus was roasted for a major data breach. And Optus parent company Singtel has maintained that a routine upgrade on its network wasn't the cause of the national meltdown. We've also been looking at the retail story. Look, we know we're facing inflationary pressures, higher living costs, everything is going up at the moment. All your bills, you've got interest rates up. Well, are you pulling back on discretionary spending? It certainly seems so, according to the retailer Accent Group, which is the owner of the Athlete's Foot, Platypus Shoes, Hype, the glue store. Well, it did say higher cost of living costs are eating into sales. It actually saw a pretty steady move in terms of like-for-like sales in the first 19 weeks of this financial year, even though it's opened more stores. And this came on the back of Walmart saying overnight that they're starting to see US consumers buy less. We also had the luxury retailer Burberry in the UK down by about 11%, saying that it's going to struggle to meet its annual forecast. And it's not just luxury. The German meal kit maker HelloFresh also cut its annual outlook, citing poor sales, and that sent its shares down 22% in Europe. So these higher living costs certainly meaning we're cutting back on food, we're cutting back on buying items like shoes. Of course, we're waiting to see what the retail picture could look like in terms of Black Friday sales though. Let's have a look at some of the sectors today, specifically energy, because we did see that big slump in crude oil prices, down around 5% to 4-month lows. Investors here responding to these signals of higher supply in the US, expectations of weak energy demand in China. All the majors lower today. When it comes to the mining space though, I mean, this iron ore run up is just incredible. And Fortescue Metals Group is, of course, announcing the fact that it is going to have a further upgrade as well, or I should say expansion. We don't have Fortescue on the screen there at the moment. Oh, yes, we do. Nope, we've got the gold stocks. But let me just tell you what Fortescue was doing. It closed up just slightly, but importantly still above $25.21. I mean, this is a stock that analysts were saying should be worth about 17 or 18 bucks just a couple of months ago. There we go. Fortescue up 1/3%, BHP up 1/2% today. And of course, we just saw the gold stocks. They were just an outperformer, as you would expect on this safe haven buying. Spot gold trading around $1,980 at the US close. Northern Star, which is one to watch now that Nuix is out of the picture, it was up 3.6%. Evolution Mining was up by about 4%. And some of the smaller ones, the likes of West African Resources, also had a really stellar day. I want to check in on some of the agri stocks. I just spoke to the Grain Corp CEO. You've got Elders. I spoke to the CEO of Elders earlier this week as well. They were saying, look, it's really hard to get top talent at the moment. Select Harvest, though, had a fall of about 3.5%. And when it comes to the tech space today, we saw a little bit of upside from some of the key players. Block, they're up by about 0.6%. Let's check in on some of the companies that held AGMs today as well. We talked about Accent there, falling by 8.3%. ResMed has very much been in focus. I spoke to the CEO a couple of, look at me sounding like I name drop every CEO I speak, but I did speak to the ResMed CEO a couple of weeks ago, and he was saying, look, they're not seeing the impact of these weight loss drugs on their bottom line. They're still seeing a lot of people needing treatment for sleep apnea, but they updated their shareholders today, down 1%, $23.06. But the stock of the day was Accent Group. The group, as I mentioned, did open 80 new stores in 2023. It expects to open 70 new stores in the first half of 2024. But it did have a tough day and actually put it on track for its worst day in 1.5 years on its soft full year 24 start. Let's have a listen to what our guest had to say.
Look, I don't think you need to necessarily worry too much about it. I think their digital sales were slightly down, but the value of those sales was up about 16%. So if they're starting to sell, bigger, larger packet sizes, then maybe that goes a bit of the way to fixing up that margin issue. So they've been an impressive company for 2 or 3 years. Definitely. I think your return on equity is outstanding. So look, hold if you've got it. If you bring it, and it really depends on your macro view. And I was writing the morning report this morning, and it looks like different sectors at the moment are just completely cherry picking their own macro view. Like oil got dumped because of weakness in Asia, iron ore's rallying because of optimism in Asia. It's just the market's not particularly transparent at the moment, and all marching to the same beat. So if you take out the macro view, I think this is harshly done by. You'd probably be buying it. If you're worried about economic weakness going forward, I'd just wait, I would say. So I guess it's a hold, I suppose.
Yep, these guys, that store rollout I think is good. But also then we've seen a lot of competition with JD. I don't know if you've been seeing it through the whole sort of the supermarkets and things like that.
Yep.
There's massive JD stores in Pitt Street now and things like that. So there's a bit of competition in that street footwear kind of thing. So I'd just be a little bit cautious. Happy to behold, it's probably one of the better quality businesses in the retail space. So that's why I think we're both saying hold just on the quality side of things.
Indeed.
Welcome back to the COB, Dr. Shane Oliver from AMP, who's been on leave. We missed you, Shane, but a busy week for you to return. Don't really know where to start. Well, perhaps we'll just have a quick look at what is happening on the market while we wait for Dr. Shane Oliver. It does look like we're going to close pretty flat today, actually, which I did mention, but interestingly, we're up by about 1% over the course of the week, and that's really in response to the fact that we had such a solid session coming through on Wednesday when the market rallied really hard to a 2-month high. Interestingly, some of the companies that were lower today were Car Group and Karoon Energy, but Dr. Shane Oliver is back with us. Welcome back. We missed you. A big week, as I mentioned, for you to return. I don't really know where to start, but let's start with that key inflation data out of the US, because that was certainly key for market investors this week, and perhaps reflecting that the Fed is done, which is probably not the same as where the RBA is at.
That's right. And obviously that information out of the US is the key driver in all of this. And the news there was quite good. Inflation fell more than expected. It had that month or two where it rose. Now it seems to be falling again. The core rate fell as well. Obviously, there's still concerns about sticky services inflation, but the bottom line seems to be that inflation is coming back down again. It's looking lumpy and bumpy, as Fed Chair Powell indicated, but the trend is still down. And so that supercharged share markets, including our own, obviously adding to confidence that the Fed is finished, although it's probably going to maintain a somewhat hawkish bias or a tightening bias, and probably still going to retain a higher for longer or high for longer message on interest rates. So there's always a danger here that markets have got a bit ahead of themselves, but at least that prospect of a further hike, maybe in December, is now looking very unlikely. And of course, we saw lower than expected inflation numbers in the UK. So those things should be positive. But obviously, our market has benefited from that, even though there is still concern in Australia that interest rates may be raised another time. I've noted that the market's probability on that has fallen below, I think it was around 30 or 40%. It's now fallen below that. But obviously, the market is still pricing some chance we might get another rate hike here. Wages numbers this week, employment numbers, I don't think they swayed things either way, but both of them surprised marginally on the upside, but you could argue they're still consistent with RBA forecasts. So on their own, they're not enough to tip the RBA into another hike. But obviously, we've got to keep a close eye on upcoming retail sales and inflation numbers. I mean, that chart you've just put up there, I think, is incredibly instructive because it shows that inflation in all those countries that went up, that's Europe, US, Canada, UK, Japan is a bit of a laggard in this one. And, we're a bit of a laggard as well. It's all coming down, and you could argue that it's coming down as rapidly as it went up again, which is a good sign. The other thing is that US and Canada peaked in June last year. Europe and the UK peaked in October. So they peaked ahead of Australia. We peaked in December. So we are lagging a little bit, but we lagged on the way up. So I don't think it's any surprise that we're lagging on the way down. And as you go forward, higher quarterly numbers and monthly numbers will drop out from a year ago, pushing our numbers down on an annual basis, much like you're seeing in that chart there for other countries.
Yeah.
So I'm not particularly alarmed that we're still somewhat high compared to those other countries, given that we lagged on the way up. And we're doing the same on the way down.
Look at that huge spike. I mean, remember when they said inflation was transitory? All right, I wanted to get your thoughts. I know you touched on it briefly, but on the breadth of market action, particularly when we reflect our market versus the US, because we're all hoping for this Santa Claus rally, and you're looking at the breadth of rally in shares being quite broad-based.
It has been when you look at the US share market coming off the lows. So top to bottom, if you take the July high to the low in October, I think it was, then it came down about 10%. Now since then, it's almost rallied to the top again, not to an all-time high, but almost back to the July highs again. And the gains have been fairly broad-based. Defensive sectors obviously playing a role in there, but also growth sectors, cyclical sectors. And the other thing to note, our market hasn't been as good. We're up about 40% from the lows. So we've got a fair way to go to get back to our July highs. But it's interesting to note from the chart you just put up there, which shows the seasonal pattern in shares. We all know that you start to see seasonal strength. The Santa rally starts about now. US market is the first to pick up. It picks up through November. We normally bottom in November or start to rally more decisively through December. And then, of course, the rallies continue. US market keeps going up until the old saying, sell in May and go away. And then you get our market lingering on until July. So we go a little bit longer than the US. A whole bunch of factors behind that. End of year optimism or New Year optimism associated with Christmas, the feel good factor, start of a new year, investment of end of year bonuses, tax loss selling in the US drags the market down into September, and then investors have to buy back in again from November onwards. So a whole bunch of factors in there, but it's not necessarily a surprise that we're a laggard on the way up. But I think in a broader sense, our market is still a little bit worried about China and a little bit worried about the Australian consumer, whereas the US share market still has tech stocks and AI to give it a lift, and there's not as many concerns about the US household sector as there is in Australia, given their lower debt load and their preponderance of 30-year fixed mortgage rates, whereas in Australia we're all short-dated rates, and that's obviously having a more negative impact in Australia.
Well, I mentioned the retail outlook and the warning from Accent. We had the warning from Walmart. How do you think all of this is factoring into the RBA? We're going to get the minutes next week.
That's a good question. I mean, the minutes, so I'm often a little bit sceptical of the minutes because I sometimes think they doctor the minutes after they release the statement, and you'd think that the minutes should be consistent with the statement.
Control V.
Yeah, but sometimes I reckon the minutes have a somewhat different tone to the statement. If you think about the October meeting, the statement was fairly bland, whereas the minutes from the October meeting 2 weeks later are a lot more hawkish. So you always got to be wary about the minutes. But I suspect that it will it will indicate that the RBA still has a tightening bias, but it did consider leaving rates on hold, so there'll probably be more information around that. But what will be of interest will be how significant its somewhat softened tightening bias is. You may recall that it was saying they may still have to raise rates again, whereas they sort of changed that to whether we have to raise rates again will depend on these things. So there was a slight change in the emphasis there. So that's what's going to be the focus in the minutes, whether it has another hawkish tone like the October minutes did, or whether it's somewhat more softened tightening bias. And then, of course, we've got the participation of the governor in a panel on Tuesday. May or may not get anything out of that one, but she does do a speech to the ABE, Australian Business Economists, on Wednesday evening. And I think it's Wednesday evening, and obviously that one will be looked at quite closely. But I suspect she'll have some sort of tightening bias in there. I suspect that she'll still be concerned about the strength of inflation, services inflation in particular in Australia.
All right, well, if you're not that interested in reading the minutes, what are you reading this week, Shane? We love Shane Oliver's book club.
Well, interestingly, I'm still reading the same thing. I went away last week, as you know, and I forgot to take the book on the Stasi land there away with me. So I'm still trying to get through that at this point in time. But I have been very obsessed with the Beatles' new single. Last time I was on the program 2 weeks ago, it had just been released, and I know Andrew asked me about it, and I hadn't yet heard it. But I must say I am pretty impressed with that single. The first playthrough, I thought, oh, this isn't so good. I thought the other two from 1995 were better, Free as a Bird and Real Love. But the more you listen to it, the more you pick up all the bits and pieces. Obviously, the close relationship between Paul and John, the slide guitar tribute, which is not George Harrison, it's actually Paul as a homage to George Harrison's playing, which I thought was amazing. And then when you see the voices of Paul and Ringo kick in, and Ringo's drumming, I was actually quite emotional when I'm watching that video, to be honest with you.
Yeah.
So it's actually quite an impressive effort, and I guess people get Rolling Stones, Beach Boys probably in the same camp, but particularly the Beatles, their efforts over many years, that obviously Paul's gone, George is gone, and yet they've still kept going 60 years later. They're still releasing material. So that's that, and good quality material that went to the number one, I think, in the UK. I think it got to number 6 in Australia. So I must admit I was pretty impressed by that, and I'm still listening to it. Trouble is, if I listen to it, watched YouTube late at night, watched the Peter Jackson directed video there, I then have trouble sleeping at night because the tune gets stuck in my head, particularly when the strings go up and the slide guitar kicks in. Anyway.
All right, we are happy to have you back. Enjoy your weekend. Thank you so much, Dr. Shane Oliver there from AMP.
Thanks, Juliet.
All right, let's have a quick look at what is happening overnight. We've got Europe October CPI, UK October retail sales, US housing starts, building permits, and a few more Fed members speaking as well. So Collins, Goolsbee, Daly, always key to watch what Mary Daly has to say as well. Let's have a quick look at what is coming up in the week ahead. We mentioned the RBA minutes. That will be quite important to meander through those. The RBA Governor panel discussion, Shane talked about that too. Of course, the FOMC Fed minutes. Inflation data from Japan and Canada, and in New Zealand, a bit of a picture on the retail volumes too. I mean, that's an economy that is weakening. So if we're already seeing this pullback in retail sales, that will be interesting to watch as well. All right, quick look at the market close. We're well and truly finished. We are flat on the CBO 200. As I mentioned, though, on the ASX 200, we have closed the week higher by around 1%, and the ASX 200 is at 7,049 points. Karoon Energy Car Group were the worst performing stocks today. That does it for the COB and, in fact, for ausbiz for this week. Remember, you can catch up with all of our interviews. I was name dropping a couple of the CEOs I've had, but I've had some really good ones. I spoke to the Origin CFO today ahead of that Brookfield takeover vote next week. I spoke to Elders earlier in the week, and I also spoke to the GrainCorp CEO about half an hour ago. You can catch up with all the interviews that myself and my brilliant colleagues did throughout the week by going to ausbiz.com.au, but we will be back bright and early Monday. Have a great weekend.